Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the week ahead analysis. We're going to be going through the key news for this week and some key charts to take a look at. So first of all, a very volatile week is expected. We have a lot of data, a lot of high impact data starting from Tuesday, and it all really kicks off with an RBA rate announcement. Now, the RBA are expected to leave rates unchanged at 0.1%. But we are expecting in the statement for them to talk about the potential of hikes to come. Again, inflation is rising globally, and we should see central banks starting to take measures. And one measure they can take is hiking those interest rates to try and calm the effects of the rising inflation. So we should expect now other kind of central banks to follow on from sort of the Federal Reserve, the central bank in the US, to potentially start hiking rates. So the first one we've got is the RBA. We then have some employment data out of New Zealand, which is expected to take a little bit of a fall. Largely due to, obviously, again, kind of Omicron data sort of still kind of coming out of countries as well, which is also to be expected with the non-farm payroll at the end of the week. But essentially, should see a little bit of downside to potentially the Kiwi this week, which we'll talk about in a second. But then we have the Bank of England, okay, and the Bank of England are looking to, or are forecast to, hike rates again up to 0.5%. Now, the Bank of England have spoken previously about their hawkish stance and their sort of views on inflation, and they will be looking to hike rates at least 4 times this year. So this is to be expected. When news is to be expected, you know, sometimes it's already priced in, so maybe the pound will have a little bit of a negative impact from the rising of those interest rates. Another central bank then, so we have the ECB this time announcing rates as well. They're expected to leave rates at 0%. We don't see any change with this, but again, inflation is going to be the big topic. How do the ECB see the rise in inflation through Europe, and is it something that is of concern, and that they will start to hike rates as well? So it's all going into sort of central banks hiking rates, and it's just how aggressive some central banks are going to be. We've actually seen the UK or the Bank of England really being quite aggressive. They're actually hiking rates significantly in terms of, we saw one in December, now we're seeing one in January. You know, how far are they going to sort of raise those interest rates? Could get to sort of the 1% or the 1.25% region. So that's going to be interesting to watch over the coming days and weeks. But the strength meter is highlighting a bit more of a risk-off market at the moment. We can see that the New Zealand dollar remains at these lows. We've seen risk currencies fall, so you can see the Australian dollar, for instance, has fallen, which is this grey line through here, moving to the downside. We've also seen the Canadian dollar dip a little bit lower as well, and then we've got those haven currencies, so Swiss, yen and dollar, all remaining fairly strong. Going on to some key charts to watch then. So the first one is going to be the dollar index, obviously really important chart to watch to gauge how the dollar could fare this week. We've broken through these $97 highs now. Is price going to remain above it? Is going to be the key question this week. Are we going to see price remain above 97, even continue and make new higher highs, or are we going to see price trade back within this area? I think the dollar should remain fairly bullish. We may get a slight reaction to what we've seen this last week, because that's quite a significant impulsive move. So we may get a sort of downside towards the start to middle of the week, and then maybe some dollar bullishness towards the end of the week, depending on how the NFP numbers come out. But essentially, I don't see the dollar downside too much at the moment, especially because they are still talking about hiking rates and they haven't quite followed through with actually doing it yet, and it doesn't look like they're going to do it till March. So it seems to me that the dollar could appreciate in value until that hike comes. That could put some pressure on gold. So gold actually had quite an aggressive bearish move last week. Now, the main reason behind that is because the US are going to start tackling the rising inflation by hiking rates. So gold is going to fall off the back of that. The dollar strengthened as well, which wouldn't help as gold is pegged to the US dollar. So I expect a little bit more downside to come this week. Few levels of interest. We've got this sort of 1830 level up here, which has acted as resistance and support recently. We also have this level around about 1810, which has acted as a slight pause before the market continued lower. So that area there is quite interesting. We also are trading back at previous lows. So if price starts to find some bearish selling opportunities there, or sellers coming into the market around this area, we could start to see a move down, as that high is kind of around that $1,800 area. Moving on to Aussie then, with the potential for the RBA to be quite hawkish in terms of their plans to potentially hike rates, we may see some short-term upside to the Australian US dollar price, considering the fact that we're at 0.7, which is a major key level as well. So we may get some short-term upside. I think this will provide some fresh selling opportunities in the market, which, you know, we could see some continued downside if price can pull back into some key levels. So again, you've got kind of 0.71 in here, which could be a level of interest, as well as this kind of supply zone up here around about 7150 could also act as resistance. So a couple of levels there to be interested in. Finally then, Kiwi. So it looks like we're going to head towards this 0.65 level as price continues to trend lower. We did talk about Kiwi a while ago, and the fact that we weren't breaking any higher than this sort of 6,890 area, and that really showed the lack of buying commitment at that point, and sellers have since dropped the price lower. Again, some couple of levels to be interested in. We've got 0.65 or 0.66. That area there would be quite interesting to see fresh sellers, as well as a little bit higher up at 0.6610 or 1.6650. Anywhere up in this sort of area, is a decent area to see some downside. So I hope you enjoyed this video update. If you did, leave it a thumbs up, subscribe to the YouTube channel to see some of our Forex trading content, and I'll speak to you in the next video.